Welcome. In this video, is XCN coin about to break the downtrend? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we carefully examine the chart, we can clearly see a distinct and well-established downward trend structure in which the price has been moving for some time. This descending trend reflects a prolonged bearish pressure in the market, leading to the formation of progressively lower highs and lower lows. In other words, each upward attempt has ended below the previous level, creating a clearly defined downward channel on the chart. However, at this point, the price is once again approaching this long-standing downtrend line. These types of descending trend lines are considered highly significant levels in technical analysis, as they represent not only visual patterns, but also psychological boundaries that reflect the underlying supply-demand dynamics in the market. Therefore, each time the price touches such a trend line, it is regarded as a critical event. Currently, the price is trading very close to this trend line, and according to some indicators, there are early signals suggesting that this downtrend may have been broken. If this is confirmed, meaning that the price manages to stay above this trend line, then it could signal not only a short-term shift, but also a medium to long-term trend reversal. Additionally, volume activity should be closely monitored during such descending trend breakouts. One of the key conditions for a healthy and reliable breakout is that it be supported by sufficient buying volume. If the price breaks above the trend line with increasing volume, this indicates growing investor confidence and suggests that the market may be preparing for a stronger upward move. In such a scenario, previously established resistance levels could be surpassed one by one, making it technically possible to start discussing higher price targets. However, it's important to remember that this breakout has not yet been clearly confirmed. In some cases, the price may perform a so-called fake break, where it temporarily moves above the trend line but then falls back below due to lack of sustained buying interest, returning to its previous pattern. This is why it's crucial to observe whether the price can remain above this trend line with several consecutive daily closes. Otherwise, the current upward move may only turn out to be a short-term correction. In conclusion, the price is currently at a critical decision point. It will either remain under the pressure of the descending trend and move toward lower levels, or it will overcome this strong resistance line and begin a new upward movement. How the price behaves around this trend line in the coming days will be highly decisive in determining the direction of the market. If we see a strong and high-volume breakout, it could be a sign of a major technical shift and pave the way for renewed bullish expectations in the market. But we must remember that trend lines alone are not enough. We also need to consider other metrics. Stay tuned. When looking at the chart as a whole, it becomes clear that the recent price movement has settled into a defined structure. This structure is a mildly upward-sloping ascending channel formation, which is commonly seen in technical analysis and carries significant signals for investors. In other words, the price continues to move upward in a stable and controlled manner within a specific range. The lower band of this channel acts as a support, consistently pushing the price upward, while the upper band functions as resistance, temporarily capping further gains. This indicates that the market is gaining momentum in a controlled fashion, building on a more solid foundation rather than showing a rushed rally. However, we are currently at a critical juncture. The price is now trading near the upper boundary of this ascending channel. These levels are technically important because a breakout to the upside could signal a shift in market dynamics. The upper channel line often acts as a strong resistance, as it is a zone where investors typically take profits or initiate sell positions. Breaking above this level could lead not just to a short-term rise, but potentially spark a broader rally over longer time frames. Staying above the channel would imply that the current structure is no longer able to contain the price, and that buying pressure is becoming dominant. Particularly in ascending channels, if the upper band is broken with strong volume, the price often continues to rise by an amount roughly equal to the channel's height. This suggests a significant upside potential from current levels. However, it's not just the breakout that matters. Volume support and confirmation from momentum indicators must also accompany the move. Otherwise, there's a real risk that the price could be pulled back into the channel. If the resistance cannot be broken and the price retreats, it may indicate that the rally is losing strength and that a new consolidation phase is beginning. Another important aspect to consider here is investor psychology. The upper boundary of the channel typically consists of previously tested but unbroken levels. Therefore, these areas are seen by investors as key thresholds. If the price breaks through this region, market expectations can shift rapidly, potentially triggering a new wave of buying. As such, a breakout above this structure would serve as a strong signal not just technically, but also psychologically. In summary, the current structure reflects a steady and cautious upward trend through a mildly ascending channel. As the price approaches the upper boundary, a breakout supported by volume could lead to a strong and broad-based upward move. On the other hand, if the price fails to break through and starts to decline, it could signal a new consolidation period or correction. For this reason, the coming days will be crucial in determining whether the channel will be broken. All eyes will be on the price action in this region and how the market responds to this resistance level. One of the most commonly used tools in technical analysis is the RSI, or Relative Strength Index, which allows investors to analyze the internal dynamics and momentum structure of the market more clearly. When we examine the current chart, a striking and well-defined structure has formed on the RSI indicator. Specifically, there is a four-touch descending trend line that has developed in sync with recent price movements and stands out clearly. This descending trend line has been tested 4 times at regular intervals on the RSI, and each time, the upward movement of the RSI was suppressed by this resistance, indicating selling pressure. Such repeated touches are highly significant in technical analysis, as the more a trend line is tested, the stronger the move can be if it is eventually broken. This particular descending trend line represents not only a technical barrier on the RSI, but also a psychological threshold for the market. Since the RSI is an indicator that measures price strength and momentum, a breakout above this trend line would be a strong signal that the market is attempting to shift direction. Currently, the RSI is once again approaching this descending trend line. If this resistance is broken, it could paint a much more reassuring picture for investors, as such a breakout would technically indicate that the market is beginning to gain momentum and laying the groundwork for a potential upward move. In the event of a breakout, the RSI moving upward and holding above the 50 level becomes critically important. This is because the RSI crossing and staying above 50 is generally seen as confirmation that the market has shifted in favor of the buyers. From this level on, buying pressure tends to increase, and a positive correlation between the price chart and RSI suggests that the uptrend is technically supported. However, the RSI trendline breakout alone is not sufficient. For the move to be sustainable, it must be supported by volume and synchronized with price action. If the RSI trendline is broken, it is likely that sharp upward movements could also be observed on the price chart, especially if the price is approaching a resistance area at the same time and showing signs of a breakout. The overlap of these two technical signals would constitute a very strong signal set for investors. Such overlaps often attract the attention of many large players, including institutional investors, and sharp, high-volume price movements can be observed at this point. However, another critical point to be aware of is the RSI's determination in its attempt to break the trend. In some cases, the RSI may make a temporary breakout and then fall back into the descending trend, creating a false breakout that can mislead investors. Therefore, after the breakout, a clear directional change and acceleration in the RSI, along with confirming movements on the price chart, must be observed. In this scenario, the RSI is expected to move above 50, hold there, and then progress toward the 60-70 range. This would indicate that the market is gaining strength in terms of momentum and that the uptrend is likely to continue in a healthier manner. RSI trendline breakouts are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.